Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's Day Trade Safe presentation on how you can actually dominate the markets with at least 87% winners. That is something that very few people can claim, and we can back this up. I want to thank you for taking time out to join me today. My name's Michael Guess, and what I would like to share with you is how a Boolean logic, rules-based mechanical trading system that's nearly fully automated is going to replace all that inconsistent results that you've been getting from your trading. The subjective and discretionary approach you've been using, even if you think you've been using a system, then ask yourself, why aren't you achieving at least 87% winning accuracy? So stay tuned. We're going to get started, but first I want to make sure that you know how to ask questions and that you can actually see and hear what I'm doing. So would you please look in the top right corner of your main monitor, and you'll see that little vertical strip with a few buttons. That's the GoToWebinar control panel. That's what controls this webinar presentation. The topmost button should be yellow with a left pointing arrow. If you'll click one time on it, it'll cause that whole affair to slide over to the left, and it'll reveal a window that was hidden. Inside that window is where you click and type whatever questions you have. Would you please type something and let me know that you can see and hear what I'm showing you today? Hey there, Peter. Thank you. I need some more folks. Come on. Let me know that you've found it. I need a few more people, more than one. I want to make sure that you can actually see and hear me. Okay, someone with no name, just Trader. Hi there. Thank you very much. Okay, Todd found it. Remember, folks, it's in the top right corner of your main monitor. If you got more than one monitor, it's the one that is for your desktop. And you will see that little vertical strip. It'll have a few buttons. The topmost button, click once on it, and it'll reveal that hidden window. So click inside that hidden window after it appears, and please type something to let me know so that I know that you're really there. Okay, I'm going to go ahead and move along here. I've already introduced myself, and this is me, Michael Guess, and I want to thank you for taking that time to join me today. I'm going to go ahead and start off with three big promises. First of all, I promise that by the end of this presentation, you won't have any uncertainty about how to achieve consistent winners. You will know exactly what it takes. And in fact, I'm going to not just show you some things, I'm going to actually give away a lot of tips and tricks that are part of the TradeSafe system that you can try out on your own. So you're going to have some free trading tips right out of this presentation. And of course, the final promise is by the end of this presentation, you will know exactly what it takes to be a trading machine. In other words, you're not going to be at the mercy of your emotions and the inconsistency about where do I get in, where do I get out. You're going to know what it takes. So why am I qualified to say these things, make these promises? Well, first of all, I've been a professional day trader for about 25 years. And I founded TradeSafe, also known as Day Trade Safe, about 20 years ago. And along the way, I've created a whole lot of custom indicators and trading systems, but I'm going to share just one with you today, the TradeSafe Mechanical Trading System. But before I started all of this, I actually had a previous career. I was a psychotherapist and a performance coach. And this equips me to help people who are in my program not just learn how to use the software and pull the trigger on those trades, but also how to maintain a stable emotional equilibrium. That's part of the course that accompanies the program. So there's more. Why am I qualified? Well, that's some of it. Way back in prehistoric times, in trading terms, We had this thing in the late 90s called the dot-com bubble. A lot of volatility. Guess what? We got that right now. Lots and lots of volatility. Things are still kind of crazy in Washington. They have settled down a little bit, and so has, thank goodness, COVID settled down a little bit more. But we do have quite a bit of volatility. Yes, I know if you take the long view and you say, oh, look, the indexes, the S&P, for example, or the Dow, they're still climbing. Well, overall, that is true. But when you zoom in and you look at the action during the day, it's really, really volatile, and it's very challenging to be able to safely get into and out of trades, not just consistently, but profitably. Well, if we move forward another 10 years from the late 90s and go into the big recession that we had in 2008 and 10, the trade safe system was still cranking out the profits. It was not impacted whatsoever. Now, along the way, I have not only learned what to do and what not to do, I've passed along this information to well over 4,000 students that I have personally coached. So I've got quite a lot of people who have learned how to use this system successfully, and I would like to share that info with you. Now, in case you have to leave early, or maybe if you're coming in late and you may say, oh, I hope I didn't miss anything, this is being recorded. So later on this evening, after the presentation is concluded, and I process the recording, I'm going to upload it into my archives, and I'm going to send out an email just to you, and it'll have a link in it so that you can watch this replay in its entirety at your convenience. A lot of people like to watch it more than once because they think they might have missed something the first go around, and they really feel that seeing it a second or maybe even more times helps them out. Now, I invite you to ask questions anytime you want during this presentation. I've already told you how to do it, but you may come up with questions that need a little more detail than I can give you during this presentation because we only have a limited amount of time. So I make it possible for you to have a personal consultation with me. It's not a sales call. I don't do that. I never ever pressure people or twist their arms, but what I will make available to you is a link that lets you see my personal schedule, and you can find a date and a time that works just for you. And that way, you'll be able to visit with me. I'll set aside a full hour of my time so that you can get all your questions answered. Okay? So, before we dive in, I've got to do one last thing, and this is more of a legal obligation. The FTC, who controls the internet, they say, oh, you're not allowed to make any kind of promises or guarantees. Doesn't have anything to do with trading. It could be weight loss. So I'm going to stick to the rules. I'm not going to make any kind of promises or guarantees, but I will share with you how our track record has worked, what my students have achieved, and I think when you come away, you will see that you too can achieve the same thing. And last of all, if you're brand new to trading and this is something you haven't done much of, please remember, don't trade with any money that you cannot afford to lose. Okay, only use discretionary income. Okay, now that we've covered that, let's dive right in. And cycles, what the heck are we talking about cycles for? Well, I'm not working my way up to it like I have in the past. I want you to know that when it comes to trading, the trade safe system is first and foremost a trend following system. That is the easiest and safest way to make money in the markets. I'm not saying it's the only way, but it is definitely the easiest and the safest way to make money. And this is a day trading system. Now, some of you may say, oh, I don't have time for that, or I've tried it, I didn't like it. Please, please hang around. I will make a very strong case for why you can actually successfully add the day trading tool of the Trade Safe system to your trading toolbox. So how is that possible? Well, first of all, I'm going to promise you, you won't have to be stuck to your screen all day. Now, that's a myth. A lot of people think that you got to be there all day to make any kind of money, and you're going to get brain fog and eye strain and hemorrhoids and whatnot. I want you to know that you can actually do this with part-time trading. And remember, at any time, you can ask a question if you want to. And if it's something I'm going to cover anyway, I'll let you know. But otherwise, please feel free to type out those questions. I want you to be interacting with me as we go along. Now, I said this started out with cycles. You see that camcorder over on the right, superimposed in the viewfinder, it's got some charts. We're going to make an analogy here. The zoom lens on your camcorder allows you to lean back, so to speak, and see the wide angle view, the big picture of what you're looking at. You can do the same thing with your charts with a higher chart setting. And of course, we're talking intraday. We're dealing with minutes, okay? We're not looking at a daily chart. We're looking at minutes. And as you zoom in further and further, you get more and more detail until you're up really close and you got a lot of granularity. And that gives you what I would call the low risk surgical entry, the lowest possible setting. That's what you want. So you don't want to use a one size fits all approach. You want to be able to switch from the wide angle and zoom in from way out using smaller and smaller chart settings. Now, the ones that are in your software, they are fixed. They typically will say things like daily, hourly, 30-minute, 15-minute, 5-minute, 3-minute, 1 minute, and so on. They are frankly useless. They're generic. What you need is software that will enable you to dial in the exact time frame settings, chart settings that are corresponding to the market you're trading. Now, I'm going to show you how to do that. I told you I was going to give you things for free. So if your software doesn't allow you to do that, well, we have a saying here in Texas. I live in Austin, Texas. Don't take a knife into a gunfight. If you're using amateur software that does not allow you to change your settings to whatever minute setting you want, then you're taking a knife into a gunfight. I have written the Trade Safe program for NinjaTrader, which 13 years in a row has won best trading software. Top of the league. It is the best software you can possibly use. I know there's other ones out there like TradeStation, but it's getting long in the tooth. It is so last century. It hasn't improved in more than a decade or two, frankly. So I recommend you consider NinjaTrader. Now, with that being said, let's come back to this zoom out, zoom in concept. This is all based on cycles, because if you're adjusting your chart settings instead of trying to trade with a single chart, this enables you to adapt to whatever the market is capable of giving you. Now, I'll go into more detail on what that means again, but it starts with something called ratios. See these three charts? This is really the same market, but from three different perspectives, three different chart settings. A large chart setting, that's your wide angle view, the biggest chart on the left. And then it zooms in 300% for the dominant cycle, as it's called. And then it zooms in another 300%. And that gives you the low risk surgical entry so that you risk the least amount possible on a trade. So this enables you to avoid the one size fits all approach that way too many traders take. You really need perspective so that you'll be able to gauge the strength of the trend, what the market is capable of giving you, so that you will be able to adjust the way you want to take your trade. Now it's time to show you how to do that. I'm going to give you a formula right now that enables you to custom tailor your chart settings. Now, I'm going to pick a group of markets that are very popular for day trading. Now, you may say, why don't you pick some stocks? Well, I'm not going to waste a lot of time on the stock market because you know what? I haven't day traded the stock market in over 20 years. Why? Even though I was in prop shops and was a SOS trader back in the 90s, those were the glory days. But institutions have taken over. They dominate and get their orders in before you. You also have other issues like uptick rules before you can sell short. You need to have at least a $25,000 account. And if you do manage to make some good money, you get really beaten up at tax time. So the stock market is actually a very poor choice for day trading. You want to pick your battles. And I recommend commodities and futures. Now you may say, oh, I don't know anything about them. I've heard they're dangerous or something like that. They're actually not. And particularly with our automated system, you are fully protected. You will lose when you do lose. That's very infrequent, far less than you would on an equivalent trade if you were trying to day trade any one of the stocks. So we're going to pick a group, very popular, they trend, and it's the indexes. We've all heard of the S&P, Dow, NASDAQ, and Russell. Those are the indexes. So we're going to start with them, and they're electronic. That means you can trade them straight from your keyboard. You don't have to pick up the phone and call the pit like the old days. And their nickname is called the minis, M-I-N-I-S. So I'm going to give you the formula for the minis, but the same approach is going to work on any other market you want to try out, whether it's currencies or something else. Okay? The first thing you want to do is discover when the open and the close occurs for the daytime trading session. I say daytime because even though these indexes trade around the clock 24 hours a day with a brief break, the majority of their volume, probably over 90+% of it, is during the daytime trading session, which overlaps when the stock market is open, plus an extra 15 minutes. So we want from the same time the stock market opens, and because these markets, these indexes are traded in Chicago, which is the central time zone, that's 8:30, same thing as 9:30 if you're on the East Coast, which you're probably more used to. But it starts at 8:30 and it goes to 3:15. 15 minutes past the 3 o'clock close for the stock market. So what you want to do is determine the number of minutes there are during the daytime trading session from open to close. Well, I'll save you the trouble. It's 405 minutes. That's your master number, and that's what you're going to start with. This is real simple. You go from here, and you're going to try to select smaller and smaller chart settings that divide into 405 without a remainder. What's the biggest number that would divide into 405 without a remainder? Other than itself, 135, way too big for day trading. Keep going. The next biggest number is 81, still too big for day trading. But if you want to maintain that 3-to-1 ratio I've talked about so you have that zoom lens effect, what's 1/3 of 81? But still has to divide into 405. It's 27-minute chart setting, which is actually more accurate than a generic 30-minute setting. But that's still too big, frankly, for day trading. Maybe for swing trading it might work, but not for day trading. So let's keep going. You're going to take the biggest and next biggest and next biggest number and use the 3-to-1 ratio until you finally end up with the last 3 chart settings. 1/3 of 27 is what? 9. 1/3 of that is 3, and 1/3 of that is your low risk surgical entry setting of 1 minute. Those are your settings: wide angle, dominant cycle, and low risk surgical entry. And you've maintained that 3-to-1 ratio. I need you right now to please type a Y and let me know that you do understand how I got this far and that you think you could do this yourself on your own charts. please type a Y and let me know. If you've got a question, though, type out your question. Thank you, Todd. Thank you, Peter. Okay, so we're getting some responses from folks. I know some of you, though, who have been here more than once, you say, I don't feel like typing. I've been here before. Come on, let's type a little bit, okay? All right, thank you very much, Gene. The 3-to-1 ratio is 1/3 of 9 is a setting of 3 minutes. A 3-minute chart setting, 1/3 of that is a setting of a 1-minute chart. Now, does that make sense? That's your 3-to-1 ratio. Type Y. Manu, if you got, he did get it. Wonderful. Now, I want you to know, because of all of the volatility that I've talked about already that's occurring intraday during today's markets, you are going to, from time to time, find that the risk levels are going to be too much for taking a trade, even on a 1-minute chart. That's because in the trade safe system, we do put a maximum risk, and I'll explain what those are, those risk levels, a little later in the presentation. But what if you exceed the risk level for a setup for a trade on a 1-minute? Does that mean you're out of luck? No. We actually use a different type of chart that can enable us to also give us setups. And it's not based on time and price like minute-based charts. It's based on something more like the number of trades or volume and price. And they're called tick charts. If you've ever heard of a tick chart, type a Y, let me know. If you're not sure what that means, when you call me up, you schedule that time with me, I'll be very happy to explain it. But the purpose of having these additional types, different type of chart entirely, instead of being based on minutes, they're based on ticks as they're called. Price moves up or down 1 tick at a time. This gives you a lot more opportunities for entering trades. In fact, on a single market basis, if you're not looking at any other markets, just one market, maybe all you're following is the Dow, you're going to get typically at least 6 to 8 setups a day. Typically more. We've had as many as 25 or more in a day when we've had a really strong trending day. So I want you to know there's not a lack of setups in the trade safe system. We do not use Renko. We need a time-based chart setting in order to first determine the strength of the trend. Then we set up our charts using tick-based other than Renko charts. I know Renko are considered sexy by some people, but frankly, I haven't found them to be useful at all. I'm not disrespecting them. Okay, thank you too. All right, now all of this is leading us up to how do we determine, since this is a trend following system, how strong is that trend? Because almost everybody, when they think of trend, they say, oh, there's a trend, let's get in, and blah, blah, blah. And they take that one size fits all approach. I'm going to show you that you really need to take into account, is it a strong trend or a weak trend? But before I even get there, here's something that I get asked a lot. Michael, it's great that you are going to show us how your system detects trends and how strong they are, but can you keep me out of trouble? I end up taking trades when there's chop and congestion. Absolutely. This screenshot of a typical chart shows the price action, and there's 2 things I want you to focus on. Look at the bottom of the chart first of all, and you see those colored bands, and then there's some intervals where there's no color. When it's a color green, the market was in an uptrend. It's drop dead simple. When it's a salmon pink color, it's a downtrend. So what about when there's no color? That means there wasn't a trend. You were in congestion. Well, what is that colored rectangle that's superimposed over price action? It is nothing more than a visual aid that lets you know before you get what is called a breakout from congestion, when price is getting close to breaking out and going into a trend, or if it's already broken out and it's coming back into congestion. So it's showing you an area, a zone that the algorithm is using to do its calculations. The actual true congestion is down below where it's blank. Once it's said, okay, no trend, it's blank. So you're going to get visual indication about whether you've got a trend. It's either green or salmon pink when it's up or down trend, or no trend is blank. But also, you're going to get audible alerts, not some dumb sound. That's very useless. It's going to actually have your computer talk to you in plain English. It'll tell you something like, and you'll hear it later when we go to the charts. It'll say something like NASDAQ 1 minute change of trend, or NASDAQ 1 minute new congestion, or it might say a breakout or a fake out, or a host of different conditions. You will hear it. This is helpful because remember I told you that you don't need to sit in front of your computer all day long? Well, if you're following maybe 1, 2, or 3 markets, I don't recommend following more than 3 at a time. Your brain, frankly, can't process more than that because that's called multitasking. And with my background in neurophysiology as a psychotherapist, I can assure you, you don't want to overwhelm your processing capabilities. But as I was trying to say, if you don't have any trending going on in anything you're looking at, you don't want to sit there in your chair. That's the new smoking. You want to get up, clear the brain fog, maybe stretch, exercise, or go fix a sandwich in the kitchen, right? And then if you hear your computer calling out to you and letting you know that you now have a trend, it is time to come back and pay attention. This is something that nobody else has. This enables you to pick your battles. This enables you to be a true part-time trader. And by the way, all of this is fully automated. All of the congestion and changes of trend and detection is done without you lifting a finger. Even if you've got charts that are hidden, even if you've got entire markets that are hidden, the calculations are still going on in the background and your computer will talk to you and let you know when you've got a change in your trending condition. Do you like that? Give me a Y if you like that feature. It's a very, very useful feature because it'll always give you a clear indication when it's safe to go back in the water and look for a trade. But you know what? Beginners tend to look at the entries. They say, oh, I got a trend. Now I'm looking for the entry. That's what I'm excited about. Actually, the professionals pay a lot more attention to the exits. And here's the beauty of the TradeSafe system. Because it is automated almost 100%, about 90+%, you don't have to guess where to get out. All of your exit strategies are predetermined and pre-programmed. That's right. We don't use a one-size-fits-all. We don't just scalp like some people tell you to always do, or maybe always scale out and take some partial profits and try to let your runners go. We're going to show you, give away, I've already given you something for free so you can try it out, the chart settings. But we're going to build on that in a few more minutes and show you how to gauge the strength of the trend, because when you know how strong the trend is, not just that you have one, you will then be able to determine, what do you want to do with that trade once you're in it? Do you want to scalp or do you want to scale out? Because now that baseball is officially started, I'll use a baseball metaphor. If you don't have much wind at your back, maybe all you want to do is on a weak pitch, just bunt and get on base. Well, if you have a weak trend, you want to scalp. You don't want to stick your neck out. You want to get in and get out with your full position and just do it at a predetermined exit. And it will be fully automated. You don't have to worry about a thing. Now, on the other hand, if you've got, figuratively speaking, a lot of wind at your back, you've got strong trend, and I'll define that in a little bit. You want to swing for the fences. You don't want to just leave money on the table with a scalp. What you want to do is get into a trade, like in this example, you would have gotten in right about here above this setup bar, and you would have taken some profit right about there, and that would have paid for your trade. But then if there's more legs on that trade, you want to trail a profit stop. That's what these blue dots are. And it'll automatically adjust itself. You'll see me do that, or it will do it by itself when we go to the charts a little bit later on. And that way, you'll let the system take you out of the trade like it did right here. You do not need to guess. It'll adjust itself in real time, giving you the highest probability for getting winners. I already told you at the beginning of the presentation that this system doesn't just give you 87% hypothetical. Those are real world results from all of my students who've graduated in the last 2.5 years that I've been capturing those statistics. So if you want real consistent returns, then keep paying attention. Oh, Todd likes that. He says, I like that a lot. Okay, so let's dive into what this strength of trend thing is. If you have, let's say, the wide angle chart, the 9-minute chart, and we're again using it as an example, the indexes. If it's in a strong uptrend, but the 3-minute chart is slowly meandering in a downtrend, and the 1-minute chart just began an explosive rally upwards. Well, they're not in sync with each other. This is what you would really want, but you're not going to get that all day long. And I'm sorry, my tongue got tied. Frankly, that's going to be the exception to the rule. So what I'm going to now give you, so you can try this yourself, this is another free giveaway. I'm going to share with you how to determine the strength of the trend and what exit strategy you should pre-select before you even get into a trade. So here is what my own students use in order to determine the strength of the trend before they take the trade. And to help them remember it, I give them a little rhyme. It's a teaching mnemonic, and it goes like this. The minimum is, the 1 and the 3 need to agree. Best is if all 3 agree, which means the chart you enter on, that 1-minute and or tick chart, must be trending in the same direction, up or down, as the 3-minute and the 9-minute. They must all be trending together, up or down. That means you got a powerful amount of trending going on that can produce the potential for a really big price move. So if you get into a trade, you have a reasonably strong expectation for getting a lot of follow through out of that trade. You don't want to throw your money away and just do a scalp. You want an exit strategy that keeps you in that trade as long as possible. You want to scale out. And I'm going to demonstrate a scaling out exit strategy when we go to the charts. So hang on to what that question you may have about what's scaling out, Michael. I don't know what that means. I will demonstrate it. But remember, I told you that all 3 agreeing, 9, 3, and 1, is actually happening infrequently. What about the rest of the time when you have some trend agreement? Well, the minimum is if only the 1 and the 3 agree. That's the one you enter on, the 1-minute and or tick, and the 3-minute. Maybe the 9 minutes in congestion are going in the opposite direction. You still have some trend agreement. It's still something that's worth taking a trade on, but you shouldn't expect a lot of follow through. It's going to be a weaker, briefer price move, most likely. So you want to pre-select a scalping exit strategy. If this makes sense to you, if you understand how we arrived at these determinations, please type a Y. I want to make sure that you are getting this so that you can go play with it yourself. Give me some feedback. Let me know that you understand how you determine when you want to scalp and when you would want to scale out, even if you don't know what scaling out means just yet. Great. Thank you for that feedback. Wonderful. All right. So let's say you've gone this far. What can you reasonably expect? Now, at the beginning, I promised you, because the FTC said I'm not allowed to make any kind of guarantees or promises about returns, I'm going to share with you what we typically get. So let's go from there. We would all be delighted to have an equity curve that goes to the moon, but we're going to take a lot of realistic, real world things into account. First of all, I already told you, if you came in early enough, you heard me say that day trading the stock market is a losing proposition. You have the deck stacked against you because of so many factors, primarily the institutions. They really mess up the stock market. So if, sticking to our example that we had used several minutes earlier of using the indexes, the unit of measure instead of shares, like in the stock market, they're called contracts, just like if you do options, contracts, right? So we're going to say you don't have a very big account, just for argument's sake, 2 to 4 contracts. That's not a lot. And we're going to again stick to the minis as we were referring to the indexes. You may say, well, how big of an account do I need, Michael? Because you already told me I need 25,000 to day trade the stock market. I don't have that kind of money. Hopefully I don't need very much to day trade these minis. Well, if you're going to day trade the minis, your typical broker has a margin requirement of only $500 per contract. So if you're going to trade up to 4, let's say in this example, then you'll need at least a $2,000 account. Of course, I really want you to trade with a bigger account, because if your first trade is a loser, you can't trade with 4 contracts anymore because you've fallen below the threshold of 2,000. You need more. So what do I recommend? I recommend about a $5,000 account, which is still not asking too much for most people. If you got more, trade with more. Now, in the emails that you got, you probably saw some reference to being able to achieve an average daily return on your investment, ROI, of about 2% to 4%. Now, some of you may think that is just as bogus as can be. That's impossible. I'm going to show you that it's actually not. Here's how we arrive at that. First of all, we're going to limit it to one market. We're not going to cheat and say you got all the markets to look at that you want. No, we're just going to keep it to one market. It could be any of the indexes, okay? Let's say it's the Dow. And if you took every trade that you got a signal for the full day of trading, and you do this every day for a week, and you do it week in and week out for the full month, by the end of the month, that's 20 plus trading days, you're going to add up your net profit. Subtract the losers from the winners. What's your net profit? If you divide that amount of money that you've got by the number of days you traded, that gives you the amount you would be earning on average each day. And we have seen year in and year out that it's at least $100 to $200 a day. If you divide that into a $5,000 account, that's where the 2 to 4% comes from. So if you're saying, oh, I really would like to trade a bigger size, because some of you may already be saying $100 to $200, that's lunch money. I need to make a lot more than that. Okay, if you got a bigger account, trade more contracts, okay? You don't need to trade that small a size. But for the majority of the people that come into my program, they don't have big accounts. So if you have a small account and you would like to have a bigger account, you would like to make more than $100 or $200 a day, I'm going to give you something else for free. This is a simple little formula that you can use to build your account regardless of what you're doing, whether it's trade safe or anything else. But this is my recommendation, that if you started with a $5,000 account and you built it up to a $7,500 account, that's an increase of $2,500. Remember, the margin requirement is only $500 for each contract. Well, if you've built your account up by enough to trade 5 more contracts, I'm going to say let's keep it conservative. Just add a pair. So for every $2,500 that you've built your account, just increase the size of your trading by 2 contracts. So if you went from 4 contracts and you're now at a $7,500 account size, you're going to trade 2 more contracts and you're going to trade 6. And it'll take a little bit less time to reach that next threshold of $2,500 more, because if you hold everything constant, remember you're trading a bigger size, so you're going to make more money and you'll do it faster. So you'll hit 10,000 before you know it, and you'll add another pair. You'll be up to 8 contracts, and so on and so forth. Now, all of you math whizzes out there have probably run the numbers in your head and said, oh, this is ridiculous, Michael. By the end of the year, you'd be like, who's that guy in the movie Wall Street, Gordon Gekko? He called himself the master of the universe. Yeah, right. We're not going to hype it. I know that theoretically you could achieve a 4,800% return, but it isn't real. I promised you we don't hype. We're going to keep things real. Let's first of all take a look at how often you're going to trade. Instead of trading every single day of the month, maybe you only want to trade some of those days. If we cut it back from 20 or 22 to say only 15, that's more reasonable as a starting point. Great. And we said this is a system that you can trade part-time, right? Okay, well, let's say instead of a full day, each of those 15 days, you'll trade a half a day. So instead of making $200 a day for a whole day on average, you're going to make about $100 a day because you're only trading a half day. So if you traded 15 days a month and you were averaging $100 a day, by the end of those 15 days of the month, you're going to have $1,500. That's over 30% return on a $5,000 account. And I know some of you have heard me say it before, if you've heard this presentation before, but I'm going to do it anyway because I have so much fun saying it. There are hedge fund managers that would just kill to get a 30% return in a year, let alone in a month. We've done it in not just a month, not just a week. We've even beaten it in a single day. So we all are excited now. We would love to have that equity curve. Oh boy, but there's one final thing that you need to deal with. And all those other webinars that you've been going to, they don't want to talk about this, but I am. Benchmarking. You are not a clone. Too many people who sell stuff to you want you to believe that, hey, just buy my thing. It's like an ATM machine. It spits out money. All the markets are the same, and we're all the same too. But the truth is, unless that is something that trades all by itself while you're out playing golf, you've got to be the person who pulls the trigger on that next trade, right? And I can promise you, again, I was a psychotherapist, I know your subconscious messes with you. Some of you are real conservative, and if you've had a few losers, you get analysis paralysis. Others of you are a lot more aggressive. You've had a few losers, you want to dig out of that hole. You're going to dive in, and you may even dig a deeper hole. Well, how do we account for the human factor? That's what benchmarking is, and this is what professionals do. This is a cornerstone of the trade safe system. Remember, we're not just offering you some software. We are including personal coaching and a full course to get you up to speed so that by the end of this, you're going to be the equivalent of a professional trader who can run your trading like an authentic business. So what is benchmarking? In summary, it's this. You will, up until then, have been practice trading, taking every single signal that you got, even if you thought it was going to be a loser. You had to take it because you want to learn from it. And you journaled the outcome of that trade so you could learn why it worked or it did not work. And I provide you with a pre-formatted journal as well as a spreadsheet to log your statistics. Now, after you've learned all of the conditions that are outside of the system that might influence your emotions and make you want to take the trade or stay away from the trade, by the time you hit benchmarking, you've got a solid idea of what worked and didn't work because you've been tracking it. So when you start benchmarking, you are then allowed to be selective. You can then pick the best of the best and leave the rest. At the end of a statistically viable sample of at least 30 trades, you will then meet with me privately and we'll break out your spreadsheet and I'm going to ask you the following questions. I'll say, first of all, how many trades did you take? At least 30, of course, to be viable. And then I'll say, how much money did you make for those 30 or so trades? The average student who graduates from my program has made typically between $3,000 and $5,000 on a 4-contract basis. Then comes the thing they all want to know. How accurate was their trading? Because they're not supposed to cheat and look at their results until it's all done. We will then look at the spreadsheet and discover what's their winning accuracy. Winners versus losers. As I told you earlier, I haven't had a single student in the last 2.5 years that I've been tracking this get less than 87% winning trades. These were their trades. I didn't show them what to take. They did this on their own. And then they want to know, how can I duplicate that? Keep it going. Because after I'm all done with your program, Michael, I want to make sure that I can keep being as consistent as I was during benchmarking. That's where I then say, let's look in the spreadsheet again. Let me know which chart that you entered your trades on, the 1-minute chart or one of those 2 tick charts, which one gave you the highest percentage of winners. The numbers won't lie, and it'll be uniquely the choice you made. Then I'll say, which exit strategy, scalping or scaling out, gave you the highest percentage of winning trades? Again, that'll be uniquely your choice that you made over the course of 30 or so trades. This combination is going to calibrate you, benchmark you to the trade safe system. Do you now see the value in benchmarking? Would you please type yes and give me some feedback, because this is what professionals do. This is how they get calibrated. So type yes if you understand the value of this. This is a full trade loss in answer to one person's question. A complete trade from start to finish, all of the trades you took, what was your percentage of them that were winners? Now, does that make sense? Type yes if you got it. Okay. All right. Folks, you've been very patient. I've gotten you this far. Now, let's see how it works in the real world. Let's go ahead and go to the charts, and I'm going to freeze my screen temporarily. Now, if you're watching the replay, you'll see what I'm doing, but I'm going to show you my charts here in just a moment. Hang on. Okay, now I'm showing the charts. Would you type yes one more time and let me know that you can see my charts? Okay, good. Good, good. Okay. Now, I'm not going to give you a super detailed tour of all of what's on the screen, but let's just reassure you that that rhyme, the 1 and the 3 need to agree, best as if all three agree. It's summarized right here. Here's the 1 minute chart, there's the 3, and there's the 9. And I'll show you how we determine if they agree or not in just a couple of minutes. But I also want to tell you that on this side of the screen, these are the 2 tick charts that give you additional entry opportunities. But the first thing that we need to do with a trade safe trade, and even though I've got more than one monitor, more than one screen, I've pulled them all together in one screen to prove to you that you don't need multiple monitors to trade this system. You can even do it on a laptop, though I strongly recommend you have an external monitor of adequate size so you don't have to squint. Okay? Yes, you can trade currency, but don't trade Forex. Forex is stacked against you for day trading. You can trade the euro, the 6E, for example. Okay? Anything that has trending personality, because markets have personalities just like you and I do. I'll give you another example of what doesn't have trending personality, but a lot of people think it's important to trade, and that's crude oil. Crude oil is really hard to trade because it doesn't tend to trend. It tends to congest a lot, and then it'll break out suddenly and oftentimes go right back into congestion. That's called a fake out. So you don't want to trade markets that do that. Gold also does that. I know they're popular, but for the wrong reasons. If you really want to trade anything in the energy complex, I would trade natural gas because it does trend. Okay? All right, let's move along here. I've shown you that we've got basically the 1, the 3, and the 9. They must agree. That is the first of 4 simple steps to getting into a trade safe trade. You may say, well, there's a lot of stuff here we're looking at, Michael. Actually, you're really only going to look at one thing on each chart to fulfill that first step. That first step, which is about trend agreement. The color at the bottom of each chart, remember, this is a downtrend. Look over on the 3-minute. It's a downtrend. But the 9-minute, it was in an uptrend and it stopped. Notice the last 2 bars, there's no color down below. It went back into congestion. It had what's called a breakout fake out. So do all 3 agree? No, they don't. So am I going to scalp here? Actually, I want you to know that we offer you a little more flexibility than you might have been led to believe. Sure, if only the 1-minute and 3-minute agree, you could scalp, but we put a maximum risk threshold. We don't want you to just risk an unlimited amount of money. You must have a safety net. You must have a protective stop loss order, and it is automatically put in place, as you'll see shortly, by the software. But if you're going to scalp, the most that you can lose on a per contract basis is $70. Notice I said the most. That implies you could actually lose less. And I'll explain a little bit later why we actually have what's called a variable stop loss order, meaning it's based on the size, the range of your setup bar before you pull the trigger and take the trade. If it's a small bar, you're going to have smaller risk. If it's a bigger bar, you'll have bigger risk. I'll show you exactly how that works. But I would like you to see that in an example we're going to have here, the risk level would have been too much more than $70 for scalping. So what is the maximum risk level for scaling out? Yes, you can scale out if only the 1 minute and 3 minute agree. However, you're not going to scale out at the same profit target as if you had the 1, 3, and 9 all agreeing. If all three agreed, you'd scale out at $100 worth of open profit, take that money off the table, you've paid for the trade. And then you hope that it keeps going and you trail a profit stop. But if only the 1 minute and 3 minute agree, you are allowed to scale out, and your risk level is still a maximum of $100. It could be less. So that's what we're going to do. Now that we have satisfied step one, we know we have trend agreement here and here. These two charts are trending down. We don't need to look at all of this anymore. Let's just maximize this window. And I'll center the chart a little bit better. And I'm going to tell you in advance what the next step is going to be by attempting to draw a crude diagram showing you that if this trend keeps going further, at some point it's going to want to turn and head back up a little bit. It's not going to change trend. It's really called profit taking. After accumulation comes distribution. So you'll see what's called a pullback or a retracement. And it's going to be to a moving average. Now you're saying, well, where's the moving average, Michael? Well, in the TradeSafe system, it is visible. The only reason I made it invisible is because too many people are always asking me, what are the settings for this and what are the settings for that? So I just made it invisible. But you're going to ask me, of course, well, how do you know if it's reached that moving average? Because we have in this little data box, wherever the cursor goes, you don't just have the open, high, low, and close. You're also going to have a readout from my proprietary TradeSafe indicators, and one of which measures how far away your most current bar is, how far away in ticks it is from that moving average. So we're looking for price to head down and then turn back up, and I'm not going to show you how many, sorry, I got distracted there. I'm not going to show you how many bars it is. You'll see it when we actually turn the chart back on. But let's say this is the last bar in the pullback, okay? Let me draw a little vertical line and pretend that's a price bar. If you think about this retracement as a stretched rubber band, it's got all this built up, pent up energy. It wants to snap back in the direction of the trend and keep going. And you want to catch a ride on that, don't you? Very straightforward and simple. So what would you want to do to take advantage of that? You want to park a resting order one tick under that bar's low. I'll put a horizontal line to show you that's where your resting order would be. It would be a stop limit order. The reason for a stop limit order is that when price trades through it, you don't have any slippage at all. So let's pretend that the next bar, it doesn't have to be the next bar, it could take a few bars, but let's say the next bar does trade through that. Then you are in the trade. After that, you will start to see automation taking over. So I've drawn you a diagram. Now that you have an idea of what to expect, let's turn on the chart itself and see how this works out. Okay, any questions so far? Or are you just wrapped with attention? Okay, I'm going to turn this on and I'm going to speed it up so we don't wait here all afternoon or evening to about 6 times normal speed. And when I start to see it turning back up again, I'm going to keep an eye on this readout right here where it says Rule 21. Right now, It is 24 ticks away, this closest part of the bar. Now this part of the bar right here is 22 ticks away from that moving average. So moment by moment, tick by tick, you are getting a readout. See how it's now 12 ticks away? So you're getting it as it's going forward. Now there's a minimum number of bars that we have to have in this pullback. I'm not going to tell you what that is because that's part of the system. And we would like it.
9-minute breakout reset.
Oh, and you just heard in the background, by the way, my computer talking to me, letting me know that the 9-minute went back into congestion. Okay, thank you very much. That doesn't change a thing because we already have the conditions we need for a trade. But we're still not close enough. See where it says it's 3 ticks away? We're going to let it keep going. 1, 2, 3, 4. I'm going to have to speed it up a little bit more so we don't wait too long. And when I am on that last bar, I will slow it down. Okay, I'm going to slow it down now. Now, when I put my cursor off to the side of this bar, you can see the readout in the data box says 0. That bar is actually touching the moving average. So I have fulfilled the condition. We've got a very direct retracement angle, roughly 45 to 90 degrees. You don't want it to meander along. And it's within X number of ticks. Actually, it's touching. And we're just waiting on this little counter in the lower right corner to get almost to 0. In fact, I'm going to pause it right now and point out that we've fulfilled 2 steps out of the 4 steps that put you in a trade-safe trade. Step 1 was trend agreement. The 1 and the 3 need to agree. Well, they did. And I chose this 1-minute chart to look for the second step, a pullback or retracement to the moving average. And you can see the readout in the data box. At the bottom of the data box, it says 0. Okay, it's fulfilled that condition. To give you some uncorrelated confirmation that that pullback or retracement has reached its maximum point of excursion, I want some other method that's not done the same way, a pullback to a moving average. And I'm going to use this very simple oscillator right here. It's sharing space with my trend indicator, but this red line, I'm not going to tell you what the actual indicator is, but it's been completely reprogrammed and repurposed. All it needs to do is get into overbought. Did it do it? Yes, right there. So it's fulfilled the third step. So we are 75% of the way to having a legal setup now with about 6 seconds to go. You don't want to wait till 0 because you might miss getting into the trade on time. I recommend getting into the trade 3, 4, maybe 5 seconds beforehand. But the last step that you pay attention to is risk. Remember, I told you already that if you wanted to scalp, the maximum risk is $70 per contract if you're trading the minis. And if it's more than that, you can't scalp. You must consider a scale out. And that scale out maximum is 100. It could be less. I'm going to put my cursor right here, and I want you to look at that same data box and move up 1 level to right there and see what the risk is. Wow, it says 45. That means technically I really could scalp if I wanted to. But I told you near the beginning of this presentation, I wanted to demonstrate that if you had the wind at your back, you want to swing for the fences, I wanted you to see how automation works, how you can trail a profit stop. So here's what we're going to do. Now that we have acceptable risk, all 4 steps are now fulfilled. The last thing you want to do is put an order in. Now, if you've ever been a day trader, most of the time you have used something called a DOM. D-O-M stands for depth of market. It's nothing more than the bid and the ask, two columns of numbers, ascending and descending, in a little window that floats above your charts. It's so last century. It's old-fashioned. You want to, nowadays, especially with NinjaTrader, park your order directly on the chart. Now I have my cursor positioned here one tick under the low of that bar's low. That is going to be a resting stop limit order, so that I'm going to require the market to put us in the trade, not that oscillator getting out of overbought, because oscillators lag. All indicators lag. So how do I park an order? You just right click, and you got a grouping of orders here. You don't need to worry about them or any of this other stuff. Just go straight to the last choice. That's always the one you're picking. And it's a sell order because we're in a downtrend. I told you it was a stop limit order, and we're going to be trading 4 contracts, and this is one tick under the low of that bar's low. So I'm going to left click and park the order. Listen to my computer.
Order submitted.
You heard the computer. Order submitted. So if I move this over, you can now see a graphical representation. See how easy it is? If you change your mind before the market trades through it and puts you in the trade, you can always click over here and kill the order if you change your mind or don't like it for whatever reason. But we're going to go through with it. Over here, this label is just reminding you of what the order is. You're going to sell 4 contracts on an SLM, a stop limit order. Any questions from anybody? If not, let's just turn this on and let the market put you in the trade. And I'll speed it up just a little. Well, that didn't take long. I'm going to pause for a moment because guess what? Now begins the automation that I've been promising you. You've got 2 more lines. This was the original line that was under our last bar in the pullback, what's called a setup bar. That's where we parked our entry order. But then we have to have a target for taking some money off the table. Half of our contracts, half of our position of 4 is where we're going to take 2. Right here, we're going to buy 2 of them back right there at only $50. So that's a real easy target to reach. And it'll pay for the trade, pay for commissions, and you'll still have a lot of money left over. What about this other line? Well, it's way up here at the maximum risk of $100. It automatically parks it up there. But I told you that the real risk level, because this bar is so small, is only $45. How do you determine the risk? It's from where you enter the trade, one tick under the bar, to where if it, after you entered the trade, went above where your stop order is going to be. So we're going to drag this down and back off one tick and click. Now there is your true risk, the distance from here to there. Do you get that? What do you mean, Hans, by how long will this last? I don't know what you're talking about. The trade, typical trades can go anywhere from a few seconds to maybe 15 or 20 minutes. That's the average length of a trade-safe trade. Of course, there are exceptions. They can go longer, and in which case, you're probably making a lot more money. Now, we've got automation. These 2 orders, your target and your stop loss order, were pre-programmed and were put there by the software. But here's more automation. They're tied together in what is called a bracket order or an OCO. One cancels other. That means that if we didn't reach the target and it turned around and hit the stop loss order, if I forgot to cancel this target order here, it's still resting in the market. And if I were to walk away from my computer or turn off the computer and price later touches that order, I'd be in a brand new trade. That happened to me when I was a beginning trader 25 years ago, and I forgot to cancel an order. And I woke up the next morning, I was $4,200 underwater. I don't want you to have that problem. I have programmed in a fail-safe. This OCO will automatically, if we hit this stop loss order, this will disappear. It's straight canceled. Okay? Well, Hans, did you come in at the beginning, yes or no? The reason I'm asking is I don't know if you're aware that this will have a replay that you can watch. If you can't stick around and you have to leave early, there will be a replay and you'll get an email. All right? So hopefully you don't want to be impatient. I'm going carefully and slowly because I've got some beginners in here. Not everybody may be as skilled as you. Okay? All right, let's keep going. We haven't made any money yet. All we've done is gotten into the trade, and I've shown you how the automation works. Let's turn things on and watch to see if we can hit the target. I'm going to speed it up about 6 times normal speed.
Target filled.
Target filled, said the computer, and I'm going to pause again. And the green line disappeared because we hit the target. So now we've made $50 in closed profits. But you know what else has happened? That stop loss order is no longer up here. It got moved to where you entered, break even, plus one more tick of profit. And it was canceled and replaced from 4 contracts to the only 2 that you need to be protecting. Actually, it's a profit stop now instead of a protective stop. So you've got all this automation going on way faster than you can move your mouse. This is why it is so important to have a mechanical system. It's more accurate, it's faster, and it takes all of the emotion out of trading. So we've made $50. Our stop is now at break even plus 1 tick of profit at $5 a tick for these 2 contracts. If we don't go any further and come back and hit it, we'll make $10 to add to the 50 we made, and you'll have a $60 winner. Well, that's great. But I would still like to try to make $100 to $200 a day. Of course, that's over a course of several trades. But let's see how this one trade does. So let's turn it back on. And I want you to pay attention to these blue dots. Once price touches them, they flip around to the correct or right side of the market. And I'm going to now slow things down and let it keep trading rather than stop it. And I'm going to connect this trailing stop indicator that will adjust itself automatically. I got to connect it to my order, which is this. So I right click and I go through a few little menus to connect it. And once I've chosen the right things, and I'm going to give it a 2 tick offset, and I click OK. Now, we're still trading. Now, this trailing stop indicator hasn't caught up with the stop yet. Once it does and goes past it, you're going to see the actual red line, the profit stop, move and adjust itself. I'm going to move this up to about 15 times normal speed. This is not how fast the market trades, folks.
3-minute congestion canceled.
Okay, in the meantime, we heard that, we got real close to tagging that profit stop there, but you see, maybe you would have pulled the plug on the trade and you would have missed what? Additional profits, because every time a 1-minute bar finishes, it takes a full 60 seconds. Remember, I'm on 15 times normal speed. Every 60 seconds, one of these dots will appear and it will pull that trailing stop order along with it. And it'll
9-minute. 9-minute. Breakout confirmed.
Okay, that's there's stuff going on that we don't need to worry about, but I'm going to slow this down a little bit here so that I can get ready to pause. Notice that it was hanging far back away from price. And then when price started going sideways and even backfilling slightly, the trailing stop indicator closed in really close to lock in profit. It's like a surface to air missile that adjusts its trajectory and rate of closure. So I'm going to speed it back up again, and we're not going to be taken out of the trade. Remember, I gave it a 2-tick offset. It's going to make contact with the indicator, and we're going to see a little pop up here, but we're going to reassociate it afterwards. So watch what happens. Okay, so I'm going to reassociate it one more time so that we're still trailing the stop. You rarely have to do that. So I'm just doing it this one time. Now, here's where the trailing stop indicator is as each bar finishes. And I'm going to move it to 20 times normal speed this time, really fast. Watch what it does. As price drops, it hangs back, gives breathing room to the trade. And if price starts to stall or backfill, start watching these trailing stop indicator positions, plot points, as it gets closer and closer to the market until finally you'll let the system take you out of the trade. Well, we got a little more gas in the tank.
1 minute. Trend loss.
Oh, and an alert just kicked in saying trend loss. You heard your computer saying it, and there's the indicator that lets us know that, hey, we just lost the downtrend. So why would you want to be in the trade anymore? That indicator milked this price move from way back here where it started, took $50 off the table right there, and then trailed a profit stop all the way down to here. Now, let's find out how much money this trade made. We made $50 on the first 2 contracts. The remaining 2 contracts, trailing a stop, added the rest of the profit. I'm opening up this hidden panel. I don't know if you can see it. If it's covered up by the GoToWebinar control panel, you can drag that out of the way. But if you can't, I'll just read it to you. It says $820. So I am just going to ask you a straightforward question. If you had the clarity, the consistency, the automation, the precision that nothing except a true mechanical trading system can give you, and achieve these kinds of profits, and remember, it adjusts itself to whatever the market can give you. The next trade may only be a scalp and you'll make $100. But if you had this kind of flexibility and consistency, just type a yes if you think that's something you would like to have in your toolbox. Oh yeah, I get a lot of yeses out of that for sure. And Trader asked me a question earlier. I'm just now getting to it. He says, what's the layout for a tick chart? It's identical. It's no different than what you're seeing here. Okay, did that answer your question? Unless I'm missing the way you answered asked your question. Okay, he said yeah. All right, I'm going to go ahead and hide that. Pardon me. And we're going to go back to the presentation and wrap things up. So Hans, if you're still here, we're getting close to finishing things, so you might as well stick around. So let me go ahead and go back to the rest of the presentation. And let's recap a few things just to make sure you remember what you were taught so far. This is a trend following system. Trend following is the safest and easiest way to make money in the market. That's been true for over 100 years. Now, we take that and we use specific settings on our charts that are based on cycles. And these are called time frame settings. So we use tuned time frame settings. In the example I gave you, a 9, a 3, and a 1. The wide angle, the dominant cycle, and when you are ready to take the trade, the low risk surgical entry on a 1-minute chart. That enables you, once you know how many of them are trending in the same direction, to pre-select the exit strategy, whether you want to scalp or scale out. This means you can adapt to whatever the market can give you. Okay? And I also showed you that we really keep our risk under tight control. You will never, on any trade safe trade, lose more than $100 for each contract that you trade. Okay? It'll probably be less because remember, if the size of the bar is smaller, your risk is going to be smaller. And by the way, for those of you who are doubting that my stops are too tight, how is that going to be possible and still achieve at least 87% winning trades, right? Well, trader, you've asked me again, just different settings. No, the settings are the same. They're exactly the same as the 1 minute. Okay, did that help you? Now, if you mean what are the settings for a tick chart, that's part of the system and I don't give that away. So, okay. Now, let's keep going. When we were in the trade, you got to see all that automation. Let's face it, folks, even in the best of conditions, not the volatile ones we have these days, things move pretty quickly. And it's really hard to move your mouse around accurately and get things done properly. Plus, you're also probably struggling with, should I or shouldn't I? If you've got automation, it takes all that guesswork and decision making out of the equation. Instead, you've got a true rules-based mechanical Boolean logic system, a real system. I know there's vendors out there that refer to their products as systems. I get this all the time. So-and-so person comes to me and says, well, I'm trading this or that system. And when I ask him about it, it's not a system. It's a loose set of rules or guidelines, but it is not a system. So you will see in this system just 4 simple, precise signals to get you into a trade safe trade. Your first one is trend agreement. Do the 1 and the 3 agree, or do all 3 agree? The 1, 3, and 9. If you at least have the 1 and the 3, you then wait for a pullback or retracement, a certain minimum number of bars, and it has to be a specific distance from the moving average. You look at the readout in the data box. It gives you that information moment by moment, tick by tick. So you know if you have fulfilled the second step, which is a legal retracement. But you don't want to put all your eggs in that basket. You want some independent confirmation that's done or calculated a different way. So we use uncorrelated confirmation by using an oscillator that simply gets overbought or oversold. And it doesn't put you in the trade. All it is just additional confirmation. Finally, before you pull the trigger, when that bar is almost finished, you're either watching the counter for the seconds to count down, or if you're looking at a tick chart, you're watching the tick counter as it counts down to get to 0. You need to check risk. If the risk is acceptable for scalping or scaling, you're going to park your order. And the result is always going to be consistency. This is your true goal. Because if you have real consistency, then you can run this thing like a real business. And to ensure that you do that, remember, I'm not just trying to train you on how to use my system and software. I'm going to give you a real roadmap that includes a full-blown course as well as personal coaching from yours truly. No, it doesn't take a full 90 days, and I'm not asking you to read through all of that. Actually, it is a self-paced course. Most of my students finish it in far less than 90 days. So it's up to you how fast you want to go, but it's not a race. It's much more important that you take your time and learn it thoroughly so that at the end of the course, you go through that benchmarking phase I taught you or exposed you to earlier so that you're calibrated to the system. That way, when you start trading your live account, you are then at the level of being a professional trader. So now that we know what you're going to get, I'm going to show you everything that's included in the package, starting with the fact that there are maybe only 6 or 7 true mechanical systems that are out there. Yeah, that's all. The rest of them call their stuff a system, but they're just hyping it. It's not. The cheapest system that I have found that's out there starts at $3,000. They go well beyond $10,000. Am I going to ask you to pay that kind of money? You can relax. I'm not. But let's say for the sake of discussion that I were starting out pricing this entire package at $3,000. But I got to give you more value than just the system. You're going to have me in your corner. When I consult with corporate clients, I bill at $500 an hour, and I get that. You get me for the full duration of those 90 days of support, not just in the trading room, but even offline. Almost nobody else, in fact, I can't think of anybody else that makes themselves available offline by phone. If ever you need me, you can schedule time with me. You'll get at least an hour of my time to make sure that you understand things so that you don't have to wait for the next trading room session. And by the way, when you are in the trading room, I'm not just acting like your typical guru guy or gal who's saying woulda, coulda, shoulda taken this trade and don't even talk about those losers. I'm going to take every single trade that I get a signal for, even the losers. Why would I do that? Because I'm trying to teach you why things didn't work as well as how they did work. That's very important because you're going to journal each and every trade that you take, both in my classroom and on your own in your own practice trading for the rest of the week. Now, while you're in my classroom, and by the way, I'm not going to ask you to be in there all day, every day, Monday through Friday. All I'm going to ask you is to spend one morning a week. So right away, we're not going to make a big imposition on your time. Just 2.5 hours a week. And while you're in the room with me, you don't have to type out your questions like you've done here today. You're going to use a microphone, a little cheap headset, and you can interrupt me right in the middle of a trade and say, why did you do that? And that's great. I'll answer your questions. In fact, I'll do something that nobody else does. If you really want to be sure that you're doing things correctly, I will even look at your charts. I can share your desktop and watch you take a trade and coach you through any problems that you're having. Nobody else does that. You are getting exceptional quality coaching and mentoring. But beyond that, I want you to at least get off to a good solid start before you even get in the trading room. I prefer to call it a coaching room. You will have a series of training videos. It's actually a weekend webinar I did with real life students, and it was a full day, and I broke it into bite-sized chunks so that you can watch it at your convenience. It'll get you up to speed on the basics so that you will then be equipped to know what to do when you get in the trading room, okay? And to make sure that your charts are all set up correctly, I give you a pre-formatted workspace and template installation. It takes 5 minutes to do. And if you're not terribly computer literate, maybe you're real scared of doing it, guess what? I have a full-time support desk staff. They can remote access into your computer and guide you through the installation process. In fact, they're available to you all week long. I am not a one-man band. I actually have a full team. This is a full corporation. We've been doing this for over 20 years, folks. Now, I've already shown you in the charts the trade safe trend indicator that talks to you, shows you everything about the trend or lack of the trend, whether it's congestion or not. I also walked you through the 4 steps of getting into a trade safe trade, each of those indicators that lets you know when conditions are met. And then, of course, once you're in the trade and the automation took over, I demonstrated one of 3 proprietary exit strategies. ATM stands for Automated Trade Management. That's what they do. They're automatic. They take care of managing your trade. So you get that as part of the package. Now, pardon me, I mentioned earlier the importance of benchmarking, and I did talk very briefly that a typical student over the course of their 30 trades during their benchmarking will average around $3,000 to $5,000. That gives you a strong indication of what you can reasonably expect as you go forward. And when you are in my coaching room, my trading room, I record everything. That way, if you have to leave early or if you just want to review what you learned that session, I've got literally hundreds of hours of archived sessions that you could go back and review at your leisure, including some special tips, tricks, and techniques videos. But I talked to you about wanting to equip you not just to learn the system, but to be a professional trader and to run your trading like an actual business. So to do that, I give you a business plan, not just to map out your financial goals. We all say, oh yeah, I would love to buy that Ferrari. Right. You got to put guardrails on your trading. Every business has to have cutoff points. What do you do if things get you into trouble? For example, how much are you willing to lose in a single day or a week or a month? Or how many losers in a row are you willing to tolerate? If you hit that threshold, what are you going to do? Dig a deeper hole? Well, you got to put that in writing. I give you a pre-formatted business plan. You just fill in the blanks and submit it to me, and I actually read and review every single business plan that my students submit and give you feedback if necessary. And it then becomes a guide for you to follow to keep you on track. Now, I mentioned trying to run it like a business. You've got to journal every trade so you learn from every trade why it worked or didn't work. You don't just jump from trade to trade. That's what amateurs do, and that's why they stay amateurs and are low on the food chain. Instead, you journal the trade. It's pre-formatted, and for tracking your statistics, I give you a macroed spreadsheet. Finally, calling on my background and experience as a psychotherapist, I have an extremely powerful tool that will help you forge diamond hard discipline so that you'll stop that self-sabotaging behavior, stop that analysis paralysis or revenge trading or whatever it is you're doing. This is all part of the package, and as you can see, it's adding up to a lot of value. Please don't worry, I'm not going to ask you to pay anything close to that much. Normally, I charge $39.95, and I have gotten it, and I've had many, many students say it paid for itself very, very quickly, and it's worth far more. But I want you to have a very special offer. But it is a limited offer. It's got a limited time span. That's Wednesday of next week, midnight Pacific time. Instead of $39.95, I'm going to slash it in half. It's $19.97. So if you're ready to get started, you want to know, first of all, is this really for me? I mean, some of you may say, oh, I don't think so. Others may say, yes, I want to do it now. Here's what I really recommend. Talk to me. Book a consultation. The follow-up emails that you get that have the replay link will also have another link for scheduling time with me. And as I said at the beginning of this presentation, I will not turn it into a sales call. I will absolutely just answer your questions candidly and truthfully so that you feel your time is well spent. And then I'll respect your intelligence by letting you go off and make up your own mind. How's that? That's not at all what most of us are used to in this industry, right? Now, even with all of that, some of you, you're staring at that 1997 and you're going, oh, Michael, that's a chunk of change. I know that it's worth it, but I just don't know if I can afford it. I have payment plans. I can make it easy for you. So I told you that there's going to be no pressure. So that means I'm going to give you a full week to think about it if you feel you need that much. Some of you may make up your mind right away, but if you really want to schedule yourself with me and not wait for that email tonight, I want you to write this down, daytradesafe.com/apply now, because after we're done here today, if you put that in your browser, it'll take you to my scheduling calendar and you'll see the opening slots that are available. And they do fill up fast, so you will want to do it today. But if they do fill up and you can't find anything that's convenient for you until after next Wednesday, I'm going to promise you that because you made a good faith effort, I will lock in your discount. You will still get the discount. Now, once you've done that, if you decide to go ahead and join trade, let's back up a little bit. Before you talk to me, you will have to actually call me. I don't call you. You call me. And you'll get reminder emails and reminder texts. So please be sure and submit, when you do this, a cell phone number. Don't provide something that I can't text you, because this is all done automatically. This is going to be a really useful conversation. You're going to get any and all your questions answered. I'll even answer questions that have nothing to do with TradeSafe. I'll help you diagnose some of your own trading problems. I'm happy to do that. But it won't be a sales call because I want you to be confident. But to help you with that confidence, let's come back to that payment plan option. First of all, one of the payment plan options that you'll see when you do click on the link to actually say, I'm ready to join TradeSafe, is a PayPal. Now, regardless of your opinion about PayPal or whatever your prior experience is, first of all, you don't need to have money in your PayPal account, and it takes a minute or two to set up. Once you've clicked on the link, it'll just ask you for some basic info. But here's what I want you to do. Click on that button that is called Bill Me Later. You'll see it. It'll be pretty obvious. It'll be a gold or yellow button. And when you do that, it'll take you to the PayPal portal. And it'll offer you a chance to do what's called a soft credit check. It takes a couple of 3 minutes, that's all. If they like you and your credit, guess what? They will give you a full 6 months to pay them back, and they won't even charge you a penny of interest. This is unfortunately only available for U.S. citizens. That's not my policy. This is PayPal's policy. So I strongly recommend you try this, because if you're going to put it on your credit card, you're going to get charged interest unless you pay off your card every month like I do. But some of us don't. So I'd try that out. Now, if maybe you and PayPal can't get along, I do have other payment plans available, but because I have to assume the risk in-house, I will charge interest. Okay? But you will want to talk to me if you have questions to discuss this in detail. And don't give me your phone number, Peter. I'm not going to call you. You have to call me, okay? You will get that link to call me. You're all excited, I can tell. So here's the link to schedule, daytradesafe.com/apply now. So when we're all done here in another minute, and I don't know if Hans is still around, you can just go to the head of the line and see what the openings are. And I will honor the discount if for some reason you can't find a date that works for you until after the Wednesday deadline. So pick the best date and time that works for you. Do it quickly because they fill up fast. When you and I do visit, it is not a sales call. It's a consultation. Do take a few minutes out to watch this replay before you talk to me, because I can't recreate this webinar over the phone. And I need you to remember what you saw in the webinar so you can ask intelligent questions. I hope that makes sense. Okay, so I'm almost done. If you're ready and you don't even want to wait to talk to me, guess what? You can cut in to the very front of the line and join TradeSafe immediately. This is the link to the actual order page itself. This is not to the schedule. This is straight away to the actual order page. It's daytradesafe.com. I want in, all one word. So you can jot that down if you want to do that. So I've got time, maybe 30 seconds for one final question, if you can make it a quick one. In the meantime, while you're typing, I want to say thank you very much for being patient. I know I've run over quite a bit. There's that link again, daytradesafe.com/apply now. Please book your time with me. You'll be grateful for it. All right. I don't see any questions. I want to say thank you very much for taking time out to join me today and learn how a true Boolean logic mechanical trading system is going to really solve your problems of inconsistency. It'll get rid of discretion, get rid of subjectivity, and replace it with the consistency you've been missing. So thank you very much and trade safely, everybody. Bye-bye.